I have spent the last 20 years in entirely two different worlds of the top 1%. When I was in my late 20s, I was a pro snowboarder. I was making 500 to 600 grand a year riding a snowboard. I was surrounded by the top 1% of extreme athletes at that time. And let me tell you a secret, most of these athletes were fundamentally broke because they made a ton of cash, had absolutely zero investment knowledge, and paid a ton of taxes. Fast forward to today, we run an investment firm that manages 430 million of real estate. Now I'm surrounded by the top 1% of real estate operators and high net worth investors. The difference between these two groups is not how hard they work. It's entirely what they do with their money. Today, I'm gonna share the brutally honest lessons I learned in going from 500K a year and working with a bunch of athletes to watching them lose it all. Yeah, going back to the beginning, I was working at TGI Fridays, you guys. I was literally living paycheck to paycheck. Before TGI Fridays, it was Payway. Before that, it was Blockbuster. Before that, it was working as a garbage man. And the reality for me is that once my snowboarding career took off and I started making, 500 grand a year, it wasn't that I wasn't making good money and I could buy things and the banks wanted to lend me money. It was the fact that I didn't know what to do with it in the beginning. I'm like, okay, I'm making good capital. Do I go to the bank? Do I buy a bigger home? Do I buy a fancy car? What do I actually do with the money that I'm making? And the separator between folks that make good money and actually create wealth is they know what to do with their capital. And that is the holy grail of investing. It's not necessarily that I make a lot. It's what do you do with the dollar? It's how sophisticated are you to know how to convert your ordinary earned income, my W-2 income, my salary income, my professional snowboarding income, to multiple streams of income that I'm living off of now because I control it. It creates passive income, multiple streams of passive income where whether I snowboard or not, whether I work or not, my income, my net worth goes up and stays steady. The biggest realization for me, you guys, and I want you to hear this, that anyone can do this, is the realization of taking control of my income. For me, in my snowboarding career, the brands decided, do we keep Dan on? It was literally people at a company watching, comparing, are you the best of the best? Are you super elite? Are you creating snowboarding content every single year that's the best of the best? And if you're not, there's like 17 different kids that are up and coming that are just as obsessed as me, that are younger than me, that want it more than me potentially as I get further in my career, that they're ready to replace you with. So the realization with me was making the money was only 50% of it. Now, what do you do with it to make it grow, to protect it, A, don't lose it, and then B, to create streams of income so that now I have more control over my income versus having somebody else control my income. Yeah, the transition from really my brands having the control to me having the control was the process of owning more assets that I controlled. At the end of the day, if you buy a great asset that actually cash flows and has extra income, now I control that stream of income. I control that piece of real estate. I can decide, hey, let's raise rents. Hey, let's add a new unit. Hey, let's upgrade this. Let's reduce that. And that control allows you to dictate cash flow to a certain extent. And of course, you're market dependent at sometimes. Rents don't always go up, expenses likely do, but if you buy right, and that's obviously the challenge that you have to continually work at to become a great real estate investor, is finding a phenomenal deal and buying it right. But once you buy and own the asset, now you have the control over your income. That stream of income is not controlled by my snowboarding brand. It is not controlled by my team manager, my brand manager. It's controlled by me. And that asset is likely rolling with inflation, right? So as they continue to print money, which they will do, being we're late stage 5 of the debt cycle, and again, we're on a currency, the dollar is a currency, and 100% of currencies in the history of the world have either failed or gone to zero. So we know based off history, the likelihood of them printing is certain, and the likelihood of them when they print, inflation will be here is certain. And so when you own things that are real, now I have more control over A, the income stream, and then B, when they print, which they will print, now my net worth, my wealth doesn't get destroyed. It maintains or actually rises. Yeah, being surrounded by the top 1% of athletes in the snowboarding world, it was really a light bulb moment for me at some of my first professional events. Getting around them, associating with them, and just being able to have kind of real conversations as we're, you know, between events, between runs, you get to just sit there and connect and communicate. And the thing that was an eye-opener for me was, as I was coming up in my snowboarding career, a lot of my friends, you know, kind of thought I was crazy, a little bit psycho, if you will, and I was. I mean, I would agree with them. I wouldn't deny it. I was absolutely obsessed with snowboarding. And the thing that was common is that once I got around other guys that were at that level, they were all obsessed. They were all psycho. They were all the same. They were all absolutely laser focused, obsessed with snowboarding for a decade or more. And so if you really, really want to be a standout with anything, from what I can see, you know, going from snowboarding to real estate, once you get to the top of anything, every one of them has at least been there for a decade, in ideally multiple decades in real estate, for sure. The real gurus have been multiple decades, multiple cycles, multiple recessions, and the lessons learned along the way is what created their success, right? So the thing that I would say about all top athletes and top real estate investors is an absolute obsession, laser focus, and clarity on what they want, and a willingness to break through any of those obstacles that come up. Yeah, the biggest realization for me, you guys, and this is across the stream, it doesn't matter if you're a pro athlete, if you're a doctor, if you're a lawyer, if you're a high income earner, the number one mistake that all folks that get stuck in the middle class world make, is they end up taking their income and buying liabilities. They literally take their ordinary earned income and go buy something that goes down in value and that they have to pay for. And it's that simple. If you're an accredited investor and you're tired of giving half of your income away and you want to learn how to structure your income to save on tax, click the link or scan the QR code below to schedule a time to meet with my team or myself. And the switch to that is make the money, and before going and buying the liability, buy an asset. Buy something where your capital goes into piece of real estate. Let's just talk about real estate here. And that capital is protected. It does not go down. It goes up as they imprint. As inflation hits, it goes up in value, and it produces income to you in the form of cash flow. That is as simple as I can put it. It is not complex. It is, what do I do with the capital once I make it? Do I go buy a liability or do I go buy an asset? Liability goes down in value, costs money, I have to work for it. Asset retains value, goes up in value, and pays you. And if you do that over and over again, assets first, you will get to a place where you're financially free because your passive income, your cash flow will exceed your expenses. And at that point, you have freedom. The way I learned that structure, you guys, was by seeing these athletes who became my really good friends, who I hung out with regularly in Salt Lake City, lose everything. I saw firsthand them make good money and go buy a big home on the mountainside, go buy fancy cars, travel the world, party. Then their income went away because they got cut, but they still owned these large liabilities. And those large liabilities needed to be paid for every month. Well, they couldn't pay for them. And so the bank says, hey, we're gonna have to take that back. And now these athletes have spent all their time paying interest on this borrowed money to look rich. And then when they can't pay it, the bank just comes in and says, I'll take that back. And pretty soon they lose their home, their cars, their parties, all their friends that were living off them were like, well, that's over. I guess I'll go do something else. And so that was the realization, that moment, and seeing that firsthand of, if you want to have a different outcome, a different result, you have to do something different. I can't do the same things and behave the same way with money and expect a different outcome. It's impossible. And so that was the realization. It was really easy to see, and I wish more athletes saw that or could get ahead of that so that they have this beautiful point in time where they're young and they have money. You take young and money, you compound it together in great assets, you can be super wealthy when you get older. When I transitioned into being a full-time real estate investor, first of all, it was not quick, right? I started with a duplex in 2012, then a 9-plex in 2013, then a 24-unit deal in 2014, and so on and so forth. And as we went through these, I'd call them different asset class levels of ownership, there was so much that was being learned, right? This isn't just something you get into and overnight you're super wealthy. That's just not the way it works. Just like being an athlete or being a snowboarder, it took a decade of massive amount of work, right? Commitment. Same with real estate investing. I mean, if you're going to do it on your own and you're gonna do it like, I'm a general partner, I'm gonna manage these deals, I'm gonna build a company, can plan on at least a decade just to get things going. Obviously, if you wanna be a passive investor and you wanna come along for the ride, totally different story. You work with a firm that's built the foundation, done all the work, and then you invest with them and are along for the ride. But the difference I see with people who are managing an incredible amount of money is they're thinking long term. They're thinking a decade or decades. If you really want to create serious wealth, or if you want to be a wealthy investor, you got to think in a decade periods in my eyes. If you're thinking I want to be wealthy in 2, 3, 4 years, 5 years, real estate is likely not the right vehicle for you, and that's okay. There's others. You can go start your own business and risk and take that kind of risk and potentially, or crypto or other different asset classes. The reason I like real estate is it's the most certain way to get wealthy over a long period of time. I just want certainty of getting to the destination. I don't care if I get there really quickly. That's just me. And so you got to decide, what path are you on and what are your ultimate financial goals? If you're listening to this and you're a doctor making 300, 400, 500 grand a year, or a business owner, and you want to learn or you want to be investing like the top 1%, the most efficient way I've found other business owners and other doctors doing that is to invest with groups just like Granite Towers, just like us. Get with a firm that is absolutely obsessed, that's 100% committed to a very specific asset class, right? To a very specific sub-market location, very specific and dialed criteria where they've done it over and over and over again, right? So it's possible to build trust with groups like us. And then when a deal is available, you come along as a passive investor where you basically place capital. You're a limited partner. Your job is to place capital and then collect monthly updates and ideally quarterly cash flow or monthly cash flow checks. That's the most efficient way I've found for people who don't want to go build the business, don't want to go and build the management companies, don't want to go and find the deals, source the equity, sign in the loans, qualify for the debt, do the CapEx work. If that sounds like too much work, the best option is to be a passive or limited partner investor where you still own the deal, you still own the real estate, but you're just along a ride and you're putting in the capital, collecting income. And usually most firms will put that capital in front of them as GPs, meaning the general partners will not get paid until the limited partners get paid first. Keeps the alignment with the capital and the operators. The biggest lesson I learned in moving between these two different worlds, snowboarding and then real estate, is the ability to take back control and to be able to have a designated destination you're actually aiming for. For me as a snowboarder, it was just to make a lot of money and to snowboard. Well, that's not going to create true wealth. If I wanted to create true wealth, I had to take control. I had to invest my capital. I had to know where I was going and actually act in a way to create that type of income, which is passive income. The system is designed to keep W-2 income earners in that W-2 position and taking home way less purely due to the structure of our tax law. You're going to be paying 40% in taxes as a W-2 earner. And just be aware of that. It is going to affect your ability to build wealth if you always have to pay 40% of whatever you're making for the rest of your life. The top 1%, they don't play that game. They buy hard assets, they force appreciation, and they use the tax code or the tax structure to keep every dollar they make. Don't let another year go by of giving half of your income away. Click the link below and schedule a call today. We'll see you on the next one.